Okay, so we do the same, all right? The higher limit, okay? The higher limit, we're saying 250,000 divided by 4 multiplied by 9 over 12, we get that amount as the upper limit or the higher limit. And then the lower limit, that's 50,000 over 4 multiplied by 9 over 12, and that gives us 9,375,000 pounds. Now we ask ourselves, we just do the same thing. If we come to our augmented profits, are they lower or higher than the are they lower or higher than the upper or lower limit, or they are within? You can see that the augmented profits of 62,000 are higher than the revised higher limit. And we have a rule. If the incomes of the company are higher than the upper limit, okay, initially the upper limit was 250,000, but we had to regress or to apportion the limit by number of companies as well as by the accounting period, the 9-month period. So in that case, the higher limit has been reduced from 250,000 to 46,875 pounds. But the same rule applies. If the augmented profits are higher than the upper limits, then we are going to use a flat rate of 25%. No MR will be available. In this case, there is no marginal relief. So sometimes in the examination, they would ask you to compute, to determine the amount of marginal relief available. And sometimes they put a 0 and some other figures. Yes, sometimes the answer 0 apply. So in this case, there's no marginal relief. So marginal relief is 0. Or no marginal relief is available. Why? Because the augmented profits are higher than the revised upper limit. So what is the tax relief? The tax liability. Tax liability is just, okay, tax liability would be tax liability 25% multiplied by the TTP by 47,000. We are going to use the 25% flat rate, all right, and we get our solution. Put 7,000 multiplied by 25%. Thus, 11,750. No marginal relief would be available in this situation. Is that clear, ladies and gentlemen? Thank you. Right? We can self-check ourselves with the computations we did earlier on. So we have trading income of 27,000, which is the same as here. 27,000, and property income, same figure, capital gains 9,000, 9,000. Get the total income of 49,000, 49,000, and then the QCDs. In this case, okay, the QCDs were 2,000, yes, and they are deducted. We arrive at TTP, total taxable profits, and then we then have to add the dividends from non-group companies of 15,000, 15,000, and we arrive at augmented profits of 62,000, which is the same as here. Now, 62,000 is between the lower and upper limit, that is between 250,000 and 50,000, or 50,000 and 250,000, whichever way you want to look at it, is between that range. So what then happens is if the income is within the upper and lower limit, you then have to lose 25% first and then apply marginal relief. However, you are only going to do that after revising the upper and lower limits. Why? Because they are indicators, they are signals that you should do so. For example, there is a shorter accounting period, an accounting period less than 12 months. It means that you then have to prorate. Here, we were tasked to do the proration in terms of the accounting period as well as the number of companies involved. This time around, there were 4 companies. This is why our proration was so complex. We had to prorate in terms of the number of companies, there were 4, and also the period was 9 months. So that fraction 9/12 was necessary. Right? So this is why we are, instead of having an upper limit of 250 and lower limit of 50,000, we reduced in line with the proportion parameters or the apportionment metrics, which were the accounting period as well as the number of companies involved. And so our upper limit was reduced to 46,000 from 250,000, and the lower limit to 9,000 from 50,000. So we then have to ask or to question our augmented profit, whether they still fit within the range. So after adjusting these limits, we discovered that the augmented profits were no longer within between the lower and upper limit. So in that case, they were now above, which means the tax rate to be applied was now 25% flat without any marginal relief available. Is that clear, ladies and gentlemen? Okay, right. I think we now have to do an exam question. The rest of the questions or the notes, the soft ones, are now going to be sent to our respective students. Yeah, a lot of questions. We skipped question number 4, which we found to be relevant to our students. They paid us. And question number 7, question number 8, question number 9, question number 10, question number 11, question number 12, all those provide rich workings. But now we are jumping to a typical section C type question. That's question number 13. We need to do this question together so that nobody is going to be left behind. We have a principle in our country, in Zimbabwe, that nobody should be left behind. Nobody. So everybody should pass this Acca everybody should pass the CCA and move on with their lives. All right, great. So without wasting much of your time, guys, we'll read the scenario and then we'll go to the workings which we did so that you just grasp the concept. The purpose of the video is not for me to show you guys that I know these things. Why? Because I've already passed them. Even if I fail to show you that, how the things are supposed to be done in an accurate way. I'm not going to, be penalized, but I have a reputation to protect, so this is why I have to dedicate the time to be with you guys. All right? So, bear with me there. it's not for me to show off that I know these things and so forth. No. But it's for us to learn. Do you know that I'll be learning as well? As I'll be teaching you these things, I'll also be learning. So it is a continuous process. All right? Which is very reciprocal. Yes, reciprocal. In as much as I give you the information, I would be, benefiting from it. Okay, good. Oh no, don't be angry. Don't be paranoid. We are together. We are in this together. Anyway, let's move on. Let's move on. This scenario relates to three requirements. Avio Limited has brought forward its accounting reference date to 31 March. Its summarized statement of profit and loss for the 9-month period ended 31 March is as follows. So we are being told that this is a 9-month period ended 31 March 2025. So it's very, very current, isn't it? Yeah. So the gross profit was 261,100. Operating expenses. So they are notes. Please pay careful attention. Pay attention to the notes. Do not read as if you are reading a storybook. Pay attention. So for you to be well guided under exam pressure, after you just look at the first part of the question, go straight to the requirements. Requirement A. Calculate Avio Limited's tax-adjusted trading loss for the 9-month period ended 31 March 2025. And by now, we'll now understand what a tax-adjusted trading profit or trading loss is or looks like, or how it is computed. Your computation should commence with the operating loss figure of 187,000 and should also list all of the items referred to in notes 1, 2, 3, 4, and 7, indicating by the use of 0 any items that do not require adjustment. So for this part, items 5 and 6 are not relevant. So you'll be wasting your time if you are reading 5 and 6 for this part. Note 5 and 6 should be ignored. The examiner has said, I'm not going to give you any marks if you just dedicate your time on those aspects, because for now, on this part, ignore them. You are allowed to ignore them. So let us go straight to notes 1, 2, 3, 4, and 7. It's very simple, isn't it? Very simple. So these ones, you said ignore these ones for now. Okay? So, like I said, when it comes to expenses, you need to ask yourself, is the expense allowable or not allowable? All right. So we are told professional fees, they were totaling 23,900. So if you count the professional fees not, the total was 23,900 as in the question. Verify if they are the same figures. Yes, they are the same figures. Good. Now let us assess their allowability. Accountant's fees. Accountant's fees, are they allowable or not? Tell me what you think. We need more information about these accountant's fees. So we need to read further here. The accountant fees of 6,200 include 2,800 in respect of the additional work arising as a result of a compliance check by HM Revenue and Customs into Abel Limited self-assessment tax return for the year ended 3rd June 2023. No additional tax was payable as a result of the compliance check. So what has come into mind? Okay, now let us analyze. The accountant's fees themselves are not bad. Yes, you need to hire professionals, especially these days. There are a lot of specialist accountants work required, for you to understand these, IFRS S1, IFRS S2 on sustainability. They are not a walk in the park. You need to know them when it comes to, these are the various aspects. They are even taxation itself. It's part of accounting. You need to be well versed with the issues. So sometimes you need to end up hiring, experts in taxation. The software itself, the accounting software, sometimes it can send you, it can send you overboard, throw you off. So you need to hire experts. It's allowed. It's allowed. So accountant fees, they are allowable. But now we are told of further work that was related, the 2.8 that was related and was also included in these accountant fees. The HMRC did some work to verify certain records, and there was expenditure incurred in respect of that to facilitate the HMRC to, scrutinize our books. We ended up, incurring. Maybe we needed some, system experts to assist the HMRC to get all those things. We had to hire additional staff, maybe sometimes some overtimes in the finance department to ensure that the HMRC was furnished with whatever information they needed. So that one is allowable, provided it was just a normal verification. But if it was something in the extreme, something that led to a tax, an additional tax being payable, something, an investigation into criminality, then the HMRC was not going to allow it. So the statement by the examiner is just showing that it was just a normal check. Because they will come, the taxmen will come one day. It doesn't mean that they want to fine you, but they want to verify if you're just doing things right. They just want to be rest assured that things are operating as they should. So in those situations, you are allowed to deduct those costs. So now the question is, how are we going to treat the figures for tax purposes? The examiner, let us get back to what the examiner said. In your computations, please use a particular figure. Let us locate that figure. You should start from the operating loss of 187,000. So when you are computing your tax adjusted trading loss, so please start from that loss. Where is that loss? This is the loss we are talking about. We need to start from that. Isn't it the same figure? 187,800? I think that's the same figure. Yes, in the exam, it's an issue of up and down, up and down. So you need to be used to it. It's not my own design. In the exam, it's an up and down issue. Remember, this is a computer-based examination, so and this is how computers work, isn't it? The issue of up and down, and thus the normal day of an accountant. It's always an up and down issue with the spreadsheets and so forth. Anyway, so we are saying if we start, remember the figure here, this figure is below. It means that for us to arrive at this figure, these costs which were allowable had already been deducted. This is allowable, isn't it? It's allowable. So what you need to do, if you start from operating loss, it means that if these figures above are allowable, they are the figures. You just have to make an entry, professional fees, and you put a 0, no adjustment. Why? Because the figure is allowable. Are we together? That is, if all the figures that make up 23,000 are allowable, then you have to put professional fees 0. But if one of the figures is a red herring, is an odd one out, then you need to write line by line. You need to write or to enter line items. What do I mean? Let us get back to the note. So we are saying on accountant's fees, you just have to put a 0. This one is allowable. Legal fees in connection with varying the items of ABL's loan notes. When we take loans, they are legal fees. All right? They are always legal fees, and those fees are allowable. For loans, that's allowable. But to raise equity capital, for equity capital, these ones are not allowable. Okay? Not allowable. Right? So if this was deducted when it wasn't supposed to be deducted for tax purposes, you add back. Is that it? Is that clear? Good. We need to add back. Legal fees in connection with the registration of trademarks, these ones are allowable. Is it a matter of picking and choosing? No. The registration of trademarks are normal business transactions. They have to be allowable. Yeah. That's normal business practices, isn't it? Good. Now, when it comes to share capital, yes, it's a normal business activity, but this is a transaction between owners of the company. They are capital in nature. So, thus, they are not allowable for tax purposes. For income tax purposes, let me say so. So, that's why we are saying that those ones should not be added back. Anyway, I'll show you the answer. Don't worry. Repairs and renewals. Repairs and renewals of 13,100 comprise construction of a new car park next to the campus business premises. There was previously no car park. Construction of car park. What comes into your mind? Okay. Constructing a new car park next to the campus business premises. There was previously no car park. So this one signals to me, sounds to me like this is what is called an improvement. And improvements are capital in nature. They are capital in nature. So they cannot be expense. They cannot be treated as expenses. They are not allowed. Not allowed. So what does that mean? It means that you need to add that 7,300 back. Repairing the wall of an office building after it was damaged by a lorry. This is now a normal expense, and this one is allowed. That's allowed. So on that one, you put a 0. If it is allowed, you put a 0. No adjustment. So the only adjustment required is the addition of the car park construction. QCD. Abel Limited paid the qualifying charitable donation of 3,400 on 15 March. Please note, this one is not allowed when it comes to the adjusted trading loss computation. It's not allowed. Where is it allowed is at the pro forma. In the pro forma, it is allowed when we are now computing the TTP. In TTP, it's allowed. But in this case, we are computing the adjusted trading losses or adjusted trading profits, although this time it's loss. Okay, the tax adjusted trading loss. So in that case, we treat them as not allowed. So for you to earn marks on this part, you need to add them back. That's the burden of taxation. You need to understand. This is why I gave you that pro forma, and I showed you. Let me take you back. I'm sorry. Let me take you back to the diagram. This is the diagram I showed you initially. Right? What the examiner wants on part A is this part alone. This is the part he wants you to do. To compute the tax adjusted trading profit or trading loss. All right? That's what he wants. So he said, please start with the loss. This is the loss part. And then we are doing the adjustments. Then, when we get this figure, we then have to combine it in the pro forma. It has to come to that, and it has to be combined with other incomes. Are we together? That's what we are doing. That's what we are doing right now. So don't be confused. I don't want you to come into my inbox and say, oh, but you say QCDs have to be deducted. Yes, they have to be deducted when we are now at the pro forma level. But we are still at the adjusted tax loss. Trading loss stage. Now, other expenses. Okay, before we go there, I know here people are worried about capital expenses. Capital allowances. Don't always worry about them because the examiner has a way of dealing with them. Remember, there's a statement. Okay, let me just show you. There was a statement by the examiner that do not worry about them. Capital allowance. No capital allowance are available for the 9-month period ended 31 March. So the examiner is saying, hey, don't worry about those ones. They are dealt with. Okay, great. I know you guys are clever and we're worried there. Now, other expenses. Other expenses of £408,500 comprise number one, removal expenses to the Kama's new business premises. This was not expansionary move. So The examiner is trying to say this was not capital in nature, not capital in nature. So it is allowed. If the removal was an expansionary motive, if you are moving from a small office to a bigger office, that's an improvement, that's expansionary. So in that case, the taxman will penalize you. He's not going to allow you to deduct those expenses. Now, there was a fine which they paid after infringing health and safety regulations. Can we allow them to go away with it? No way. We need to add back. So this one, you need to add it back. It's not allowed. Remaining expenses, these ones are fully allowable. So you need to then know that those ones are fully allowable. So if they were allowable, but now this time around, don't put a zero. Hold on. Don't put a zero this time around. It is the position at which the expenses will be. Oh, yes. So you need to put, yeah, you still need to put a zero. Why? Because they are still above that amount, the loss. There's two figures which were already deducted. So don't deduct them twice. Am I talking, friends? Good. Don't deduct them twice. Okay, so put a zero. That's okay. Allowed, so you put a zero. Right? So you need to, because one of the items is not allowed. One of the items is not allowed. So you need to write entries for each of these. You put zeros where it is appropriate. Okay. For example, here you put a zero, here you put a zero, but here you put this figure in its entirety. All right. Why? Because it is going to be added back. Just put the positive figure as it is there. Just to be added back. All right. I think for trading income, all right, there was note number 7. The examiner talks of note number 7. The interest payable of 8,750 is in respect of the company's loan notes which were issued on 1 January 2017 and were due for repayment on 31 December 2024. However, Apple Limited has varied the terms of the loan notes so that they are now repayable on 31 December 2029. At the same time, the annual rate of interest payable was reduced from 7 to 4% with effect from 1 January 2025. Interest of 8,750 was paid on 31 December 2024 in relation to the 6-month period ended on that date. Interest for the 6-month period ending 30 June 2025 will be 5,000. The loan notes were issued in order to finance the company's trading activities. So what comes into your mind? Remember, there was a clause during the theoretical discussions at the start. Elsewhere in this particular video, where I say that interest income or payable is treated on an accrual basis. I said interest or rental incomes and so forth, they are treated on an accrual basis, not on a cash basis. So in this case, we are told that the company paid interest. They paid interest of 8,750 on 31 December for the 6 months period ended on that date. And then the other 6 months is due to be paid on June 30, 2025. However, our year ends, the year ends 31 March. Remember, this company's year end is 31 March 2025. So only 3 months into the year should be accounted for. Even if the payment is due on 3rd June, the 3 months interest, 3 months interest has to be paid. or would be due by year end. Is that clear? Despite the fact that it is going to be paid, for on 30 June 2025, but it is due now. At year end, it will be due. Remember the accrual basis. So we need to pay. How much are we going to pay? If the 6 months are costing 5,000, then the 3 months obviously are going to cost 5,000 divided by 2, isn't it? Is it divided by 3? No, it's divided by 2. Why by 2? We are simply saying the period is 6 months, but the period due is 3. So 3, that's half, isn't it? So this is why we are just 5,000 over 2. This 2 is a half. Are we together? So 2,500 will be due. So how much is due? The total interest payable or allowable? The total interest allowable, because these interests are allowable, remember. Interest on loan notes is allowable, guys. Interest on loan notes is allowable. So both this amount 8,700, which was paid, is still within the same year, isn't it? So 8,700 plus the 2,500 has to be deducted. It's allowable. That was not number 7. And it had quite a lot of things. All right. So now, let me show you what I did on my exam so that we won't consume much of your time. Okay. Good. So, tax adjusted loss for the 9-month period ended 31 March 2025. So we start with the operating loss because the examiner said, please use my figure. Start from the loss. So being a loss is a negative figure. So we started with it. Okay. This is the same loss we are talking about. Ladies and gentlemen, this is the loss. Oh my God. I don't know what's happening with my pen. Okay, that's the figure we are talking about. And this is the figure. Then there was an issue of compliance check. We said compliance check is allowed. Okay, the compliance check was allowable. So, which means, the full accountant fees have to be, we're allowed, and this is why we put a 0. The expenses have already been deducted in arriving at that operating loss. So we then have to, put a 0. Compliance check is also allowed. Compliance check is allowed. Legal fees in connection with varying the items of loan notes. Legal fees on loan notes is allowed. It's allowable. Legal fees in connection with the issue of share capital, this one is not. This is why I said not applicable here. I said that's not applicable. Remember? There. We said not applicable. Legal fees in connection with the registration of trademarks, patents, these ones are allowed. Okay. Construction of new car park. This one was capital in nature. So 7,300. And the examiner, according to the examiner, he feels the construction did not qualify to attract capital allowance. Okay. Do not question me why. Okay. he said that no capital allowances were applicable for the 9-month period. He said that in the question paper. So do not waste time, asking seminars, why did you do this? We are told that this type of assets should qualify, this and that. They won't be that high. Repairing the wall of an office building, this one was allowed. We put a 0 there. Qualifying charitable donation, 3,400. Please take notice, we are adding back here. Why? Because we are still at tax adjusted loss computation. We are not at the total taxable profits computation. Is that clear? That. So if the question was now requiring you to do the TTP, you were supposed to adjust the qualified charitable donation accordingly. Removal expenses, these were not expansionary, so we put a 0. They were allowed. Oh my God. I'm going to lose everything there. What's happening? Thank God I played around with the technology. Oh my gosh. Okay, now, fine for infringing health and safety regulations. These ones have to be added back. Yes, because the taxman doesn't want people who commit crimes. Remaining expenses, we were told they were allowable, so just put a 0. Why? Because they've already been deducted by the accountant. Then we need to deduct the interest payable. All right, this one. Then we get the tax adjusted trading loss of 177,850. Then you just have to clap hands to yourself and say, oh man, I have passed. I have passed. It's so easy, isn't it? So those are the computations for part A of the question, ladies and gentlemen. And do we have anything on part B that is so special for that's warrant discussion? Part B is saying, before taking account of any possible loss relief claim, calculate Abio Limited's taxable profits for the 9 months, taxable total profits for the 9 months period ended 31 March 2025. So you are now required to compute the taxable total profits. Ladies and gentlemen, this is a part C paper. Question. Part C type question. So if you joke with it, that's your own baby. It's my pen. I do not know what's going on. It's my pen, guys. My pen. It's troublesome. My pen is troublesome. Let me try to resave the document. I think I've lost almost every. Oh, the data has been retained. That's great. That's great. That's good news. So for this part, it's very essential to have your pro forma at hand. So we know that to compute the GTP, you need the pro forma. We start with the trading profits. In this case, it's a loss, trading loss. Okay, and then we go to property income, earning. We go to capital gains, right? Go to capital gains. What else do we put there? We then jump over to QCDs and so forth, isn't it? Good. So let's start with the trading loss. Remember, this is taxable total profit. Taxable total profits. So if any of these items has got a zero, you need to ignore it, isn't it? I mean, if any of them is a negative figure, it ceases to qualify to be a candidate in this pro forma. So our profit here is a negative figure. It's a loss. Okay, it's a loss. We need to ignore it. Or you can simply put a zero there. But it's safer to just ignore it. Or sometimes you end up confusing yourself. Should I put a zero or the actual figure and so forth? You need to ignore it because we don't tax losses. We only tax income. That's the rule. That's the UK rule, at least. Oh, yeah. Okay. Now, when it comes to property income, do we have any information relating to property income? Yeah, I think I saw something. Yeah, property income. Abel Limited lets out a warehouse which is surplus to its requirements. The building was empty and available for letting from 1 July to 30 November 2024, but was let. So it was being offered for letting from 1 July to 30 November 2024, but it was actually let from 1 December 2024 onwards. So from 1 December onwards simply means up to the year end, and our year end was 31 March 2025. So how many months of income was that? From 1 December to 31 March, that's 4 months, isn't it? 4 months. 4 months income. 4 months rental income. So we have got the income and expenditure breakdown. This is almost like a schedule for the 9 months. So on 1 July 2024, insurance for the year to 30 June 2025 was 840. So they paid insurance to 30 June 2025. So this one should be for our year, it should be for 9 months, isn't it? Because our year ends on 31 March. So March, April, May, June. So this one is for 9 months. Rent for the 6 months ended 31 May 2025. So we obtained a rent for months up to, for 6 months up to 31 May 2025. What does this mean? If it is for 6 months to 31 May, and we know that from, so it means that only 4 months. So this one is supporting the idea that 4 months are relevant, okay? So the rental income which we are entitled for this particular year is for 4 months, all right? Because our year ends on 31 March. So the rentals for April and May are not for this particular accounting period. Remember, for corporations or for companies, it is the accounting year, their accounting year that applies. So the 4 months income, right? So what it means is the applicable income. The applicable income here is 4 over 6 months multiplied by 6. This is the income that should be taxed, that should be part of the property income. All right, and we are told of the security deposit of 2 months rent. Security deposit is not our income. So this one should be deducted. Deduct. This should be deducted, this one. It should be deducted. It's not part of the income. Is that clear, guys? Good. Security deposit, not an income. Why? Because when the tenant wants to leave, you are required to give them back their security deposit. If they were having no rentals outstanding, you need to give them back. That's not your money. Okay, so the taxman doesn't tax you on that because he knows that that's not your money. Okay, what else? What else? Then let us read this other part, the CG, the capital gains, disposal of shares. On 22 December 2024, Abio Limited sold 1% shareholding in an unincorporated company for 25,200. So that was the disposal. The disposal proceeds was 25,200 pounds. The shareholding had been purchased for 12,400 at its indexed cost on 22 December 2024 was 36,000. So you can see that the taxman is very lenient in the UK. They factored in the cost from 12,400 to 13,600 with inflation. So they factored in inflation so that the cost will be a little bit higher. That would reduce your ultimate tax liability. So the amount to be taxed is the gain. So the gain should be 25,200 minus the indexed cost of 13,600. Okay, and that would give us the gain which should be transported to the pro forma. Okay, let us see what we did. Let us see what we did, ladies and gentlemen. Okay, now part B, like I said, we need to put a 0 there because we don't put negatives. All right, on this part, we don't put negatives. So this is why I said you can just ignore that because when it is a loss, we cannot tax losses. So the rent receivable was for 4 months, 4 months over 6. This is what we indicated there. 4 months over 6 multiplied by the rent received. I mean, it need not to have been received. Remember that the actual basis, isn't it? All right. So actual basis, it doesn't mean that it was actually received. Even if it wasn't received, but it was due. So the taxman is going to tax you. So it is a receivable, a rent receivable. That's 4 over 6 multiplied by 6,600, and you get your 4,400 there. Then the security deposit is not our money. The security deposit is not our money. Okay, so if it is not our money, why did we put a 0 and not a deduction? Okay, I want you to open your ears and your eyes as well. We are saying here the adjustments about adding and subtracting were relevant if we were going to be still using a certain figure. But now, these amounts are actually very, very independent of this item. Okay? So, if you deduct on this part, you are deducting from which figure? So it won't make sense. So something that requires no adjustments, you simply have to put a 0. All right. This one wanted some adjustment, but against which figure? Because if you come to the note, the rent for 6 months, we are saying that we only needed 4 months. So we only picked the figure that was applicable and we put it there. Remember, we are computing incomes which are legally incomes in the taxman's eyes. So we are saying security deposit is not income. So whether they had written 1 million here, we were going to put 0 on the tax schedule for the taxable total profits. Why? Because that's not income. All right. So let me just remove this deduct and just say do nothing, because that's not income, isn't it? Okay, I'm sure we are together. That's not income, so put a 0. Now, for the expenses now, insurance for the year ended 3rd December. This one was a negative figure, as you can see there, but we are saying only 9 months apply. So this is why we are saying 840 multiplied by 9/12, and we get that amount. Don't know what's happening. It's not responsive. It's not responsive. Okay, then we move on to the chargeable gain. So you can see that we are still following our usual pro forma. So the chargeable gain now, this is the disposal proceed minus the index cost, and we get the 11,600, and this is the computation which we showed you. Let's qualify charitable donations. You can see that here now we have returned to our usual treatment of QCB. The usual treatment of QCDs, we deducted them. All right? But do not forget that if you are required to compute the tax, the tax adjusted trading profit, you need to add them back. Why? Because they are not an allowable expense. That's right. So you do your computation, your arithmetics, and you need to arrive at the taxable profit of 11,970. Okay. Now let us complete the question on part C. State by what date Abel Limited must make a claim if it wishes to set its trading loss for the 9-month period ended 31 March 2025, as calculated in Part A, against the company's total profit for the year ended 30 June 2024. So here, the examiner is giving you a hint. Sometimes you are given a hint by the examiner that on Part A, you should come up with a trading loss. Come what may, it should be a trading loss. Because if you find, or if you found a profit, then part C, part 1 is going to be a troublesome question to you because you would be further confused. So sometimes you just have to put whatever loss figure you have found because you are not going to be penalized twice. So whatever figure you found as a loss, then you then have to explain by when should Abel Limited make a claim for a refund. All right. Must make a claim if it wishes to set its trading loss for the 9-month period ended 31 March, especially against the company's total profits for the year ended 30 June. So, by when should they make such a claim? Normally, you need to just say within 2 years after the loss-making year, something like that. So, what did the examiner say? A claim must be made by 31 March 2027 within 2 years of the end of the period ended 31 March 2025, the loss-making period. So within 2 years of the loss-making period, Apple should launch, should lodge a complaint, a claim for them to have their previous profits absorb the current year losses. Okay, great. So that was a 1 mark, isn't it? Calculate the amount of corporation tax which will be repaid by HM revenue and the customs, HM revenue and customs, HMRC, if Apple Limited makes this loss relief claim against the company's total profits for the year ending 30 June 2024. You should take into account any necessary loss relief claim against the total profits for the 9 months period ended 31 March 2025. So obviously here again we are further tipped. Yeah, we are being given some further tips on how to treat these things. So the loss is to first clear any available profit. So we start by finishing this, the total profit here. The total profit has to settle the loss. So the 15,700 should go first. Should be sacrificed. The 15,000 should go first before we proceed to another year. Why? Because we are saying you are in a loss situation, okay? You are in a loss situation, so whatever profit you made should all come to zero. You didn't make profit in any of those ventures. So we first clear the current year profits, and then we move on to the previous year with the remainder. Something like that. So the loss carried back is 177,850, which was the trading loss. Remember, the loss to be carried back is the trading loss. This is the trading loss we are talking about. We computed this on part A. Remember, this was part A. So that's the loss that is to be taken back or to be carried back. But we need to first settle it with the current total profits, which I showed you. Okay, these are the current profits. Good. And then we are left with how much? We are left with 162,480. This is less than Apple Limited's taxable total profits of 166,300 for the year ended 30 June 2024. Is that so? Let us get back to the question. What did the examiner say? Yes. The examiner said, for the year ended 30 June 2024, Apple Limited had taxable profits of 166,300. So you can see that this is lower than the loss, the current year loss, after adjusting it with the current year profits there. So, this is less than Abel Limited taxable profits of 166,300 for the ended 3rd June 2024. So the corporation tax repayable will be 162,408 multiplied by 25%, which is equal to 40,620. So this is the refund you get from HMRC. Somebody want to say, why can't you just apply? Why can't we also apply marginal relief? No, you can't. Then marginal relief will reduce this refund. It's not applicable on refunds. Okay, it's not applicable on refunds. Marginal relief is there to reduce your tax liability. Okay, but now it is a receivable, so you don't need marginal relief there. Is that clear? Good. So guys, that was a long journey with you, and I hope you have benefited. I hope you have benefited, guys. Guys, don't complain too much. Please don't complain. Don't complain. Yeah, so there are some people who want to take, some screenshots. That's our question, ladies and gentlemen. Okay, let me show you the Excel in full. Hope everything is visible then. Content fees. Okay. Part B. That's it, ladies and gentlemen. And if you feel like you need assistance in any of the Acca modules, here's my number, ladies and gentlemen. That's +263 774 596 368. Okay, now I think I will have to dedicate 1 or 2 videos on employment income as well as capital allowances. So just stay around this channel. I think by Monday, Tuesday, I'll be able to upload another one. All right, see you guys in the next episode. Thank you.